Hi, I'm Jermaine, co-founder of the Learn, Grow, Invest community. I started this community to help investors learn about money, finance, and everything related to investing. So if that sounds like something you're interested in, be sure to subscribe to this channel. Today, I'm going to be talking about reasons for selling a stock. Now, I'm just going to include 5 reasons. Now, this is not an exhaustive list, and I'm sure there are other reasons you could come up with. So I'm actually going to invite you to let me know in the comments below if there are any other reasons you can think of apart from the 5 that I'll mention here. We do stock reviews, we do, we cover investment topics, and I'm really encouraging you and inviting you to join us here at Learn, Grow, Invest. 2 things I'd like you to think about before we start to talk about this topic. The first thing I want you to think about is, what is your investor profile? What that means is that I need you to understand and think about who you are as an investor. What's your investor character? What are the factors that make you up as an investor? The reason why that's important is that makeup, that investment character, separates you from other other investors, and it also makes your reasons for buying and selling differ from each investor. What that means is that the 2 of us would have 2 different reasons to buy, 2 different reasons to sell the very same stock, because we have different goals, different objectives, we're at different life stages, we have different responsibilities. All those things are important. So think about that first. The second thing you want to think about is the reason why you bought the stock you're considering selling in the first place. That is very important because thinking about the first point, if your reason for buying holds true, then you definitely don't want to sell, right? And that's just, something that makes sense. But now these are 5 things that I'm going to mention that if they differ from the original reason, then you'll want to consider selling. Now, the very first reason you would consider selling a stock is that you made a mistake. You bought it maybe because you rushed into it. Maybe it was the latest and greatest IPO. Maybe you saw somebody tweet about it on Twitter and he said, well, let me buy that. And you have no reason, no solid reason other than somebody else referred it. Now, this is very common for brand new investors, for those who are inexperienced and immature in terms of the market. Now, that's actually a good thing. Right? I think it's okay to acknowledge that you've made a mistake. What I would do in that case is, if you've made a mistake, try to exit that stock at a reasonable point. Hopefully it's not at a loss, but you could actually be making a profit. But if you can't justify holding on to that stock, it may make sense to sell it as well. So that's the first reason. The second reason are personal reasons. You may want to, make a purchase. You may want to put a deposit on a house. You may want to pay your school fee. Any personal reason can come up here. It's very important when you're considering personal reasons that the purpose for selling that stock, it justifies you exiting that position and risking future return on that stock, right? Because when you're selling, what you're saying is that you're taking that money out and you can no longer gain on that stock. Now, there are nuances to selling where you may not want to exit your entire position. You may sell some. We're not going to talk about that in this video. We'll cover that in another one. But just be sure that your reason makes sense. Third reason for selling is portfolio imbalance. Now, we covered the topic of rebalancing your portfolio a few months ago. I'll link that video in the description and above in the card. Check that out. What portfolio rebalancing is you set out asset allocation targets. So you may want to say, well, I want to have a 20% exposure to the manufacturing sector. So all the stocks within your portfolio that are from that sector need to be 20% of your overall portfolio and no more. So if you're at 25%, 30%, you may want to sell that and rebalance those funds within the rest of your portfolio. Now, I cover this topic in depth in that video, so please check it out. This is actually something that I practice. I've been doing it for about 4 years, and I rebalance my portfolio to ensure that my exposure to the different asset classes are at a level that I'm comfortable with. To each person that asset allocation target may be different. What matters is that you set that target, speak with your licensed financial advisor, and come up with the targets that work for you based on those same investor profile, preferences that I would have spoken about before. And then that may determine how much you have in stocks, how much you have in a certain, type of stock, how much you keep in cash, etc. So that's reason number 3. Reason number 4, the short-term outlook for the company has changed. Now, this could be for a lot of reasons. So, for example, COVID could have impacted the short-term outlook for a lot of the companies in your portfolio. It did for me. And so I would have made the decision to exit certain stocks because I knew COVID would have impacted my portfolio a certain way. So I exited some positions and decided to use that money to invest in companies that I believe COVID would have actually helped. So tech companies, for example, companies that maybe do shipping and logistics, companies that manufacture food. Those are companies that may be better suited for the climate that we're in now in the short term than for me to hold it maybe in a company in the financial industry, for example, because we've seen those stocks have a massive correction since COVID and they haven't fully recovered yet. That is an example of the short-term outlook changing, and so you want to sell the stock in the short term while those factors are there, and then you may enter that position at a later date. That's reason number 4. So reason number 5 is that the fundamentals of the company has changed. Now, you may have hopefully you would have done initial analysis on the company. If you're not familiar with what fundamental analysis is, we've covered that topic on this channel. I'll link that below as well. Look at it. We did a 3-part series on fundamental analysis. It covers you reading the financial statements. It covers you researching the company, understand, the industry, market share, competitors, etc., and making a decision as to whether or not the company is worth buying. If those fundamentals have changed, then the stock may not be suitable for your portfolio anymore. So you may decide to sell it at that point because the reasons for buying it would have changed because the fundamentals would have changed. Now, these are some of the questions you want to think about in going through assessing whether or not the fundamentals of the company has changed. And I do encourage you to watch our video on fundamental analysis in full so that you understand what things to look for. Now, question 1, is a company still generating revenues in the same way? Are expenses getting out of control? Question 3, are they losing market share fast? Meaning is a competitor gaining on them? Are they no longer relevant in that same space? Are customers moving to a competitor? Number 4, is the economic climate or market making it more difficult for the company to do business in the same way? Meaning, are there increasing costs? Are maybe the conditions, the lockdowns are impacting their ability to make money? Is the investor sentiment for the stock still the same? Has it changed? Are investors no longer bullish? Are investors no longer caring for that stock? These are things that could impact the price in the short term. Now, if the company is solid, then long term the price should rise. But in the short term, investor sentiment is extremely important. And also customer sentiment. You may want to look to see if customers feel the same way about the company. And the last one that I'll add here, question 6, that you should ask is, has the management approach changed? Now, has it changed for the better due to COVID, or has it changed for the worse, meaning that they're making poorer decisions now and it could impact their profitability long term? So these are some of the questions that you should look at in terms of considering whether or not the fundamentals for the company has changed. So that would be, reason number 5. Now, there are strategies that you can employ when you're selling a stock. So the thing I'd say here is that you don't need to close your entire position. If it is that you're up on a stock, you may actually consider taking profit and leaving the rest, or you may sell your original capital worth of shares and keep your profit in shares. Hopefully that makes sense. If you don't understand it, let me know in the comments below. But that's a strategy that I have used in the past, where I want to take profit from the company to utilize the funds in another company. I sell maybe 80% of those units to take my capital out, keep my profit in shares, and continue trading that capital, because then that allows me to take advantage of another opportunity. And there are many other investment strategies that I'll actually cover. That's one of the videos that were requested. So I'll be covering investment strategies next, so look out for that video. If you found value in what I've shared here today, please consider leaving this video a like, share this video with a fellow investor, and let me know your thoughts on this video in the comments below. Thank you for watching. If you haven't done so yet, we have Learn, Grow, Invest merch that you can purchase to show that you are a part of the Learn, Grow, Invest community. I encourage you to follow us on social media. We're on all major platforms, including TikTok, and I hope to see you in the next video.